Yo, ladies and gentlemen, what's good? What is happening? Welcome to that Thursday. New York Live, madness in the charts. What is good, ladies and gentlemen? Yeah, you know what? Bitcoin may be immune to the Fed, but if it follows the S&P, then the S&P will follow what the Fed does, then Bitcoin's probably going to follow the Fed. So it's one of those situations, my friend. But never mind. What is good, ladies and gentlemen? Let's roll with the flavor, ladies and gentlemen. What is happening? Good afternoon, good morning, wherever you are in the world. So, the Fed. They made it pretty clear yesterday that they ain't going to be slowing down. The problem that we've got, ladies and gentlemen, is this issue that if the Fed's not going to slow down, what's it going to look like in the near future? Well, from a market's perspective, we've had a little bit of a downwards move. Bitcoin's dropped, NASDAQ's dropped, S&P's dropped, everything seems to drop, and we've got a lot of strength in the dollar right now. Dollar's looking like it's tapping that close towards that 13 zone, 113 area. And we had news today from the Bank of England saying that they've increased their base rate by 0.75, bringing it to around 3%. More importantly, they project that next year, the UK will be close to and even below its target of inflation, below 2%. That's pretty interesting, isn't it, ladies and gentlemen? The Fed doesn't even see inflation going down. And the problem is the labor market will always be that bane for the Fed. Today, we had some news come out regarding the unemployment claims coming in less than what they had projected to. They thought 220,000 people on the unemployment claims would come in, but it actually rolled in at 217,000. What does that mean? Quite frankly, ladies and gentlemen, the story is simple. If the labor market is strong, the Fed's going to have a problem controlling inflation. Inflation is hot right now in the US. There's no reason why the Fed should be slowing down. What? They don't care, ladies and gentlemen. They're more interested in getting inflation lower. And if it's not happening when they increase the interest rates, then more increases are going to come in. I'm not here to spread FUD, ladies and gentlemen. Translate it as FUD all you like. If you don't like what you're hearing, this is the truth of the marketplace. So with that being said, ladies and gentlemen, we need to understand something else. If we know the Fed's not going to be increasing its interest rate, increasing its interest rates and not slowing down, the only data that is left for us to solidify the idea that the Fed is still going to be aggressive is Friday, tomorrow. That's where we will know where we stand with the labor market. If people are still getting a good wage, if people aren't claiming that much benefit, and people are in good with their jobs, the Fed has to be even more aggressive. They need more people unemployed, okay? Now, let's go on the assumption that if the Fed does get a bit more aggressive with its interest rates, what will happen now? Now, because everything has dropped, we're expecting a little bit of a retrace. Don't get it twisted. During bearish markets, we do see rallies. You can see Bitcoin's trying to come away from its zone. You've got the NASDAQ trying to make a little move to the upside, given that it's been taking a nosedive to the downside. Why am I making reference to the NASDAQ continuously? Bitcoin, in principle, if you were to put Apple, tech stocks, and Bitcoin is like a tech stock. Some of you might challenge me on that, but for the nature of demonstration and to get the guy who's new to the game of trading to understand, Bitcoin is like a tech stock, okay? Now, NASDAQ tech stocks are based on long-term value. So if the interest rates are going to be increasing in the near future, that means that it's going to be harder to maintain business loans. Less credit's going to be obtained. Mortgages are going to be at sky roof prices. It's going to kill the economy ever so slightly. The UK's stipulated, and the central banks of the UK have said it, that the UK is in a recession. All right? But the US ain't accepting that. They're just saying it's high inflation, so we just need to keep on increasing it. The problem that we've got is if traders run to commodities, because bonds are falling, if traders run to commodities, that's going to squeeze more pressure on inflation, because naturally prices are going to keep on rising and rising. And we're going to get to a point where inflation just peaks out, which is where, in principle, I would anticipate the black swan event. Now, what's a black swan event? Pretty simple. It's when an event happens in the marketplace which you could not fathom the amount of liquidity that leaves the market. Yesterday, 820 billion left the market. Isn't it ironic how you see these statistics happening? Billions leaving the market. From June's low, okay, in the summer, all the way to the high that we've just recently pulled back from, $7 trillion was wiped off value in the stock market. That's a bit of a sad story, isn't it, ladies and gentlemen? So, what we're going to do is we're going to roll over to the charts. Mad love and respect to everyone passing through. Be sure to like and subscribe. Let's have a conversation. So, what do we see? Well, in front of us, ladies and gentlemen, hold on a second, hold on, hold up. We can't do this without the little head. There you go, ladies and gentlemen. Now you can see the expression in my face when I get angry, or if I want to put a point across to you all, you know what the flavor is. We're about to bring you some fire, so let's roll with it. Bitcoin, green vector candle at the lows. What does that tell us? This looks like it's a stop in the chart, ladies and gentlemen. Bitcoin teasing that 20,000 zone. Look at how close they got to hitting that 20K. If I was a market maker, could be. Now I'm playing. Maybe. Who's Steve? I don't know. Anyways, if I wanted to get people to buy at a particular point or sell, where am I going to push price towards? I'm going to send it to the one spot that I know in crypto, psychologically, the 20K range in Bitcoin holds true. And we can see that is true, ladies and gentlemen, by even just going over to the 6-hour chart, where any time frame higher than an hour, you can see what the 20K range is all about. And you can see bright as day that this zone is very important. Now, it won't tap the 20 to the T and bounce away. Don't get it twisted. But we are seeing that the market reacts great to these zones. And what I'm going to try and convey to you, ladies and gentlemen, in these areas is where people will say, if it can hold, happy days. All you need to do is go to the glass node and see where the euphoria was and where the greed came in when Bitcoin hit that 20K zone. That was the highest point. Bitcoin could never go to $100. Bitcoin could never go to $1,000. Bitcoin could never go to $50. Bitcoin could never go to $60,000. It could never go to $50,000. But it can go to 100K, but it can't go to 8. Hold on a second. Why can't it? I'm going back to what I said yesterday, ladies and gentlemen. Never say never. And that saying holds true in the marketplace. Because everyone makes the mistake of thinking that everyone's value is an agreement at one point in time. That's not the case. Our beliefs in where we think price should be and what it needs to be, and all the miners are going to have a problem. Listen, they don't care about miners. Remember, this is trading crypto. You're trading futures. This is where it's at, ladies and gentlemen. This here. This is the high block. $4.826 billion worth of short liquidations at the 21,250 zone. What a beautiful place to be. Just shy of that, ladies and gentlemen, down at the 19,900, there's $5.2 billion worth of short liquidations. We're in a bit of a zone right now, guys. Will Bitcoin go up? Will Bitcoin go down? All you need to do is just have a look at where Bitcoin is right now. And you can see we have just pulled back to a key moving average on the 6-hour time frame. Problem is we have this area right here. Now, this could be an area that they come back to at some point by the principle of the hybrid system, ladies and gentlemen, where we are looking for this cycle. And I advise, if you are using the hybrid system, you mark off this structure, okay, every single time you come to your charts. Why? Because this works on a monthly time frame, a weekly, a daily, an hourly, and 1 minute, a 30-second chart. Cycles within cycles, ladies and gentlemen, and that's what this is all about. You got to try and take where you are in here and apply it to the chart. So let's do it again. Where are we? 6-hour chart shows that we've got this structure right here. You got stopping volume candle principle right here with the green vector candle and another stopping volume candle with the push away from the zone, and it's broken the structure, and we've got vector candles coming inside of this area here. So now that the market has reacted to the idea that the Fed's interest rates are going to be looking to be increased, we do have tomorrow, which could be the day that the market runs for profit. If the news comes out tomorrow showing strength in the labor market, we've just pretty much sealed the fact that the Fed is just going to go and do what it needs to do to increase interest rates. They don't care about forcing the US into a recession. That's why the game of trading is all mental. Give me a reason to buy, I will. Give me a reason to sell, I will. If we're in the belief of a recession, everything's going to roll over. People are going to pull their money out, and then they're going to just stuff it into cash, which will then lead us into the idea of Dixie continuing up. Now look where Dixie is, ladies and gentlemen, coming back into the clues that they left us not so long ago, coming back to vector candle recovery. They saw some profits yesterday, then they turned straight back in time to grab that volatility during the FOMC. Okay? Now let's just go into Bitcoin for a split second to understand what we're doing on the lower time frames. Before we do that, mad love and respect, ladies and gentlemen. I hope you are all doing well this afternoon. Who's with me today? Who is with me? How are we? Traders Reality. Forget 8K, 40K, 100K. Trade the PA for F. Yes, I agree. Just trade price action. Maybe my titles are somewhat clickbaity. I'll accept that. But when you come in here, you ain't getting no moonboy status from me. No chance. I've never said Bitcoin to 100K. Never said a price point. And the only reason why I said 8K is to help you understand the idea of the hybrid system and liquidity, to get you to understand it. We can never assume that the market will stop at one point just because it looks like they should stop because they'll break it. They clearly can do whatever they want, ladies and gentlemen. And that is evident with the S&P itself back in the day when they had tanked it all the way down to this zone. Look at this. That's your black swan event, ladies and gentlemen. That right there. Look at that for a drop. This drop, to be frank with you, from this high all the way down, is a 36% drop. Okay? Now we look at this. Where are we at from the previous high? Down. It's only a 27% drop. So would we assume that if S&P continues lower, right? Given that it's held above the 50, could we see a little bit of a relief rally back up? Because what could happen, ladies and gentlemen, the S&P could roll up towards this zone and roll here and come back. Maybe up until this point right here, the Fed could give us an indication that maybe in December they reduce the interest rates and only increase it. Not reduce the interest rates, but increase it ever so slightly by 50 basis points. Tomorrow will show the proof. Now, we look at S&P because Bitcoin's following it. I'm sorry. It might hurt the guys in crypto because Bitcoin isn't doing its own thing. Gone are those days, ladies and gentlemen. That's the truth. It's done. Big money in Bitcoin is doing what legacy assets are doing. All right? Now, going into the 5-minute time frame, I just want to go into Bitcoin for a split second to understand where we are. Okay. So we're at the lows. The US Brinks session has formed. Does the principle say that when the Brinks box forms at the lows, can we anticipate that a high is going to be achieved? In other words, could Bitcoin formulate this structure to break out, to recover some of the vectors in this zone, to bring things back into the frame? Because the principle does say, and go back into the charts and pull up when the Brinks box forms, when you see price dropping to the downside before the US session, they're either going to start the US Brinks with a stop run, so up and down, formulate the low for New York and shift out to the upside. That is potentially what is happening right now in Bitcoin. Odds are in the favor for that. But remember, anything can happen in this marketplace. And if you're not cool with that and you just want surefire approaches to the game of trading, trading is not for you. I'm sorry. probabilities are your friend. And you've got to say to yourself, how likely is price going to go to that point? Let me put my money where my mouth is, and I will take a trade on this principle. Okay? That's what you do. Going over to Ethereum. Ethereum's doing very well to hold away from its lows. Problem is we've got a green vector candle in this region. So this could be the point where the Brinks box itself finalizes at the lows. The issue is that we have got or had the actual news announcements for unemployment claims. And now the market has only to react to just that. But it's not that much of a market mover. Okay? But non-farm payrolls tomorrow will be the market mover. That will solidify the Fed's stance on whether it's going to go up or down in terms of price action. They're going to get aggressive with their interest rates. We'll know tomorrow. EURUSD. Consolidating in this zone. Now, listen, we have done nothing but drop, ladies and gentlemen. So we would expect naturally a little bit of a recovery, all right? Because it's just going to break the market. A little bit of a fade back up, test the moving average, shake out all the retail traders, all the guys running stops, and then continuation to the downside. Structurally, you'd be looking for something like this, all right? That's what you're waiting for. News coming out today, non-manufacturing PMIs coming out. And if that comes in anything at 55 or below, then it's still good. It has to stay above 50 for us to understand that there is no contraction in that sector. And this is information that takes 300 purchasing managers and asks them the question, how are things? How are things economically? What things are like in terms of staff? Where do you project your business to be in the near future? Are you going to get busy with interest? Are you going to start buying more things in the near future? Well, if the Feds are going to increase the interest rates and we don't know when they're going to stop increasing them, that means those purchasing managers are going to have a bit of a problem in the future. So if this data comes out showing that there is no contraction in the ISM manufacturing PMI, that tells us that these businesses are doing well. Not just that. If people are still working, and they're still earning money and still spending it, it's like, what's the inflation? We don't care. Still, business is booming. Happy days, okay? Now, going over to USDT. Let's go back to what happened yesterday, guys. What did we say about USDT during FOMC? You remember very well, don't you? They initiated the trap. They ripped price to the downside. They picked up some crypto, then they released it back up because everyone had purchased. Now we got sell liquidity that we can go into. Happy days. The principle of the hybrid played out yet again. Bitcoin's price action yesterday, guys, before FOMC, during FOMC. Happy days. Look what they did. They rolled price up, stop hunt rise, ripped it to the downside. Now, I would welcome Bitcoin to come back up into these zones. I'd welcome that. But don't make the mistake of thinking that if Bitcoin can get back up towards the 20,600 zone, it means that's it, Bitcoin to the moon. And that's the sad truth, guys. That is the sad truth because people are impressionable. Look where price is right now, flirting with that 20K region. Give me another reason to buy Bitcoin because in people's minds, they think Bitcoin at 20,000 is the lowest that it can go. What if it goes lower? Where are you going to be at then? How will that philosophy of the 20K being the psychological zone have any impact? It's showing it's having an impact because price isn't breaking beyond it. So that's installing in your mind the idea of price staying there and moving only one way, and that is up. You can see that from the high block itself. $5.2 billion worth of long liquidations are sat in this zone at the 19,900. This is what traders like to do. They like to find these whole and half numbers, okay? So let's just take the 20K range. Now, if you were going to set a limit order at 20,000, okay? Bear with me a second, ladies and gentlemen. I've got something in my eye. If you're going to set an order at this point, where would you set your stop? Yeah? You'd probably set your stop a little bit lower, okay? Because you want to keep with risk management and hope that when price hits it, it bounces away from it. That would be the ideal scenario for the retail trader. This is exactly what is happening here. People are using the 19 zone or just below the 20 because they think that beyond that point, if Bitcoin goes towards the 20 zone, all the interest is going to come back in. Now, look, if any of you guys are using the high block, and all the guys in the Discord, remember this number, 5.284 billion. Okay, so 5,284,347,877. The reason why I want you to remember that is because later on, depending on how price behaves, if price gets closer and closer to 20K, guys, right, we will know if traders are getting rid of positions. Now, if the market can see that traders are getting rid of their positions and liquidity is being removed from here, that means the market can't go back to that point. It can, but Mr. Market Maker will be sensing that price is the interest at this zone is starting to disappear. In other words, traders are taking their money off the table, and he needs people to keep their liquidity on the table. All right? Tino, my stop loss is my liquidation. Nah, man. Listen, guys, do not allow your stop loss to be your liquidation. What's better? Having a liquidation point or having a stop loss? The stop loss keeps you in the game. But having your liquidation as your stop loss means you're out the game completely. So where's your risk management? It doesn't help, does it, guys? There's no point in opening a trade and going all in. Look at it from a poker's perspective. What are your outs? Pre-flop. A pair beats you. Okay? If you've got a pair of kings, pair of aces beats you. What are your outs? The flop turns. Now you've got a different board texture. Now you can play the game. Is your pair good enough? Are you looking for trips? Are you looking for quads? You've got more probabilities when you have more of an environment. But when you go blindly on a trade and have a liquidation point as your stop, you are in principle trading blind. You're not giving yourself a chance to see how it can develop. The stop loss preserves. The stop loss allows you to make a decision. If you just allow it to be your liquidation point at the same time, well, why not see it like this? Imagine, okay, you run along from this zone, okay, and Bitcoin goes up, right? No, shush. Imagine your liquidation point was right here, okay? That means at 20,150, you've got yourself a chance to blow your account. But let's assume that your stop loss is here and you then increase your margin so that your liquidation point is a little bit further away. So now what we're doing is this. We're saying that if price comes down to my stop, I can either close half my position to see if it will continue lower. And if it does continue lower and hold and then start to stabilize and come back up, I can add back into my position. I ain't got to worry about my liquidation. At the same time, what you can do is your stop can get triggered. You can close your position and change direction on the idea it's going to continue even lower. So you can either trade towards where your liquidation was by changing direction at this point right here. Guys, I can't stress it enough. You want to stay in the game of trading? Get used to cutting your losses, all right? You can't be right all the time. Finished, okay? Yes, Bitcoin looks like it's recovering that vector candle, ladies and gentlemen, but it's just purely for demonstration purposes. Remember what I drew earlier on about the Brinks box forming at the lows. We've had a bit of a drop down. We've reacted to the FOMC. Now we're going to see a little bit of a recovery, and we will know exactly where we stand in relation to that. Once UK's trading times close today, New York will have free roam of the marketplace. Are we all good with that? Tino, please organize an online poker tournament for our community. Do you know what? I would love to do that. I'm currently doing one right now. I'm trying to organize one for the patrons of the channel where I'm going to try and organize a Call of Duty match and an online poker tournament. And the winners of the poker tournament and the Call of Duty, I'm going to fund to take advantage of a funded trader program, okay? And I'm going to help them out to try and pass that program, okay? That's what I'm trying to arrange. But I do want to arrange a Traders Reality YouTube poker tournament. That would be beastie. I would love to do that, you know? So we've got to try and sort that out. Mike, we need to sort that out, man. We need to get people to practice the game of probabilities, because anyone that played poker in the past that has become a trader, whoops, Anyone that's played poker in the past that has become a trader will understand that poker and trading are no different, okay? There are things you can control and there are things that you can't control, all right? I can control how much money there's in the pot based on my contribution. I can control whether I put all my money in, all right? But I can't control the event. And as long as you get that in your mind, then the only thing that's going to be in your favor is sample size, all right? So then I go back to the liquidation discussion. The more times the more your liquidation point is close to price or close to your entry, the less buy-ins you have, the less chance you have to play the game of variance. There was a poker player called Isildur. Don't know if anyone remembers him, all right? And Isildur was this Swedish dude. No one knew who he was, what he looked like, and his name was Isildur on PokerStars, right? This guy would play heads up and called out every one of the top poker players to play heads up with him, all right? This guy grew a 2K heads up account all the way to about 15 million, just being so aggressive with his poker ability. Now the word on the street says that that was just a variance. Variance was in his favor throughout that whole time. And that can be the case in trading, ladies and gentlemen. You can have beginner's luck, but at the same time, if you apply a discipline and exercise it over and over again, and you reduce the chances of risk to ruin when you open a trade by making sure you don't allow your liquidation to be your stop loss, how do you not know that the next trade you take is the one that 10x's your account? What's worse is people will commit a bag of liquidity to only make a small amount back. Now, okay, scalpers, that's kind of what we do. But to the new trader, I suggest that you try and make it your goal to stay in the game for as long as you can so you can evolve as a trader to work out where are your limitations and your boundaries. We got some movement happening right now, ladies and gentlemen. What is going on? What is happening? Let me just bring things up right now. Let's have a look at what's going on. Dixie's coming back down again. What time is it? It's now 1:30. Sorry, it's 1:30 in the UK. That means the futures markets are now open. Now we're going to see what's going on in the charts. Dixie's coming back down again. That's good news for us. As long as Dixie rolls over, everything's going to be good. EURUSD trying to come back up. Let's have a look at NASDAQ for a second. NASDAQ is taking a nosedive, but it usually has this behavior where it likes to do a stop run during New York and tries to reverse back up. Here we go. Is that going to be the case? Potentially. Here we go. 10,800. Let's see if NASDAQ can hold this region. S&P at the same time going down strongly. Where's Bitcoin? Bitcoin pulling back. It's quite a hard time right now. I'm looking at the chart right now up here. NASDAQ is taking an absolute bleed, but it just looks consistent with a stop run. I believe that's going to be the case. Let me just sort out things here. Yeah, it looks like it's a stop run. I'm not too concerned about that. Dixie's at 113 right now. Let's have a look. Dixie is not at 113. That is not true. Dixie's pulling back down. Aussie yen breaking lower. Let's have a look at the book map for a second. Where are we at with the VWAP? Where's my VWAP? We're below the VWAP, ladies and gentlemen. That could be a little bit of a promise. NASDAQ just did the dirty. Look at that for a stop run. Look at that for a stop run right there. Remember what we said. Establish the low. Boy, it's getting hot. Establish the low. Look, they've been trailing lower all day. All right? Futures markets are now open. Good news on GBPUSD in principle. As you can see that they're trying to come away from the lows. They're projecting out that inflation's going to be slowing down by next year. That's happy days. We've got Rishi Sunak, was a hedge fund man, not a hedge fund manager, but he was in the space of hedge funds. So economically, as a politician, he kind of has an idea of where to see and how to move the economy moving forward in the UK. I am so hot, it's crazy. Gold, still trading lower, ladies and gentlemen, not really bringing me that much flavor. And usually when gold is taking a drop, guys, that tells us that investors aren't seeking gold as the haven, which means the yields are starting to move higher. Let's have a look. Yeah, well, yields have been moving higher, but they're sort of coming back down, which is a good sign for us. That is a good sign. Let me just have a look at the yen. Is the yen doing its flavor right now? Good. I want yen to be dropping because then that means they're picking up. I actually want the yen to be rising because that then tells me that the yen traders are getting rid of Dixie positions, so getting rid of their net dollar longs. Now, dollar is actually at the highs, guys, so it's a bit of a tricky situation here. I'm keeping an eye on NASDAQ. Red vector candle forming on the 5-minute time frame on NASDAQ. We've got 2 minutes until that finalizes. Got to be very cautious with this play right now with NASDAQ because there's a lot of stop runs happening right now. Oil is taking a nosedive lower. That's a problem. That means dollars going up. USDT trying to hold out. Bitcoin still holding at the lows. That's good news for us to hold in this point. There's a lot of madness happening. I'm getting really hot right now, ladies and gentlemen. Please forgive me for this. Okay, then. Let me just roll over to Ethereum for a second. Holding out. This is all in the favor of the ISM index coming out. They haven't tested the daily open on Ethereum. We got vector candle regions that we could see them coming into later on. I'm expecting, quite frankly, a little bit of a move in New York, okay, until they stabilize the whole situation moving forward. Bruv, I am so hot. It is crazy. What is happening in this place, man? I can't believe it. Anyways, moving forward, where's that stop run? I want to see if NASDAQ has done it. There we go. Nice little stop run. Happy days. Look at that bad boy. This trickery of the market. Hate it sometimes. Let's have a look at Tesla. Tesla trading strong, closing the gap. Google coming back up. Microsoft sort of moving up. No gap down in Microsoft, so that's good news for us. Vector candle recovery in Microsoft itself. And then, of course, the VIX is at the highest point. Hasn't hit that 30 mark yet, but it's pulling back down ever so slightly. Okay? Yeah, I'm getting hot, man. It is getting hot in here. Get the towels ready. Let's get ready for that OnlyFans moment, ladies and gentlemen. I'm getting really, really hot. I'm joking. No OnlyFans. Excuse me. Let me maintain composure right here. How many of you are in the room with me? 1,500. Mad love and respect to all you people passing through. Now, listen, let's just get into a little bit of a projection right now. Hold on. We know the story of the US Brink session. Now, for anybody new, okay, the Brinks box itself is the money trade. It's where the trade gets set up. Look what's going on. All right? This is where they move price. Now, listen, this doesn't mean Bitcoin's going to the moon. No. This is why I say to you, forget price focus movement. In 2 years on this channel, the first time I had said Bitcoin 8K. Let's see if it rolls out. Ladies and gentlemen, if you are new to the channel, be sure to like and subscribe. I'm going to be doing a video for tonight, and we're taking a bit of a deep dive into how to trade certain structures, all right? Remember, pay yourselves, get yourselves acquainted with keeping your stop loss open and not having it as a liquidation point. You might just survive in this game. Mad love and respect, ladies and gentlemen. Be sure to like and subscribe. You want more details on the hybrid system? Check it out at the Patreon. It's pinned to the top of the chat. I'll check in with you all later. Peace.